Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to talk about fractals. Fractals are, it's a pattern that repeats over and over. It happens on different time frames. So what you see is you see these fractals in the patterns. They repeat over time. Sometimes you see them in long-term fractals. Sometimes they're in the shorter term. Basically, it's Elliott wave theory. And what we're going to do here is we're going to look at the fractals of the last bull market in its size, compare it to the current fractal to show you guys that there is similarities between the two. We're going to do some calculations based off the previous fractal and apply them to today's fractals. This isn't something that's an exact science. It's not something that I would use for the basis of projecting sell figures or anything like that. That's going to tie into market conditions, money flows, ratios. I mean, I use a lot of different pieces of information to determine if it's time to sell. I'm basically looking for an alignment of time to sell. It doesn't have to be perfect, but it has to be somewhat close. The valuations have to be overvalued. There's got to be liquidity that's not pushing in the market. There's a couple of different things. But this is just an experiment, just as we're experimenting with different fractals, see what the potential or possibilities could be, doesn't mean that it will be. So again, don't use this as financial advice or anything like that. This is just an opinion. We're playing with numbers to see what it looks like in the similarities between the last bull market and this bull market, and then doing some calculations of where things could end up. So I'm going to start here with natural gas. So let's jump right in here. I'm going to start with natural gas, the commodity itself. So this is American, priced in United States dollars, natural gas. And I'm looking at the previous bull market. The previous bull market started in 1999, where the circle is. We had a three-wave run-up. 1, 3, 5. We peaked, and then we pulled on back in a corrective phase. We then continued under similar, or I should say we continued under favorable market conditions all the way till 2008, which is this peak. The way this thing moved up in that time frame was during a commodity bull market. Now, natural gas is subject to supply disruptions in hurricane seasons. So there are some hurricanes in here. There are some seasonality, and all of these things overlap to create these patterns. But the overall pattern is an original move higher, a pullback, which is the bear trap. Then we get a big third leg, and then we have a pullback again, and this is the last kind of pullback up. So third leg is here. Fifth wave, I think, is this guy. And then we have that U shape and then a consolidation period. I believe that we are completing our first wave. Wave 1, wave 3, wave 5. And then I think we're going to get a pullback here, which we're in the middle of. Is it going to look exactly like this pullback? Not necessarily. Not necessarily. We're going to have to see how this thing pulls on back. It very well could pull back more than where we are at today. If you were to do a trend line kind of at the bottom here coming up, you'd get about $450-ish is where this could potentially head back to probably sometime later this year. But this is the first wave, I think, being completed. We're going to do wave 2, which is a pullback wave, which we're in the middle of. And then I think we'll see a big third wave ahead of us. Looking at oil, it's a very similar look. We've got this nice big move here from 99, 98 to 2001. We pulled on up, we pulled on back. And then from 2002 onward, we did the first wave, third wave, fifth wave. And then we went into a consolidation period after that. I think that we just completed the first wave of an upward move in oil. That first wave correlates well with the first wave in natural gas. and I think it's aligning quite well. The reason I think this is the first wave and we get our pullback is because of where we are in the market conditions of a recession and the S&P 500 and NASDAQ rolling over. It rolled over during the same time frame that this circle, the first circle, happened on both of these. We had a rollover in the markets that brought these markets back down. The size of this pullback is unknown, and I don't know if people can time it perfectly. So my strategy when I entered this bull market was to buy the heck out of the bottom of this, cost average in on pullbacks, and try to get the best pricing as this thing is in mid stride. It's difficult to do that. I will say that because it's not like you had this gigantic opportunity where you had a consolidation period. It squeezed up into a corner at the bottom of the consolidation period. You also had the alignment of ratios throwing cheap signals. You also had the alignment of the housing market going into an expansionary phase and a capitulation blow off bottom. That's a lot easier to identify if you're an experienced investor than trying to catch some of these mid-stride. You have to revert to Elliott wave theory. You have to revert to Fibonacci pullbacks and all this stuff. And sometimes it can get sometimes the markets over exemplify or not pull back as much as what they normally do in a normal market. Sometimes they pull back 30%, 40%, 50%, 60, 70% on that first pullback. We won't know for sure how big the pullback will be, but I can tell you things can be amplified given the market conditions that are out there. A recession can amplify the move lower depending on how bad that recession necessarily is. If it's perceived to be horrible, we could get a larger pullback. If oil is not manipulated as much during that recession, we might not have as large of a pullback in oil. So it highly depends on the market fundamentals and the market conditions happening all at that time. And it becomes very stressful to get it right perfectly. So I just try my best to cost average in when it's cheap. And when I think it's cheap, I add in and I ride the big bull market wave. So to get back to this, I think this is the first wave based off of where we are in the market conditions of real estate, which is an inflationary boom. I also think that we are roughly in these same market conditions based off of the ratios in relationship to other assets. It all aligns very well for this to be the same fractal of an upward move. So this fractal here is this fractal here. And I'll show you the similarities of these fractals using a company, one of my favorite company. I will use the fractals to show you how it lines because it's a beautiful chart that has beautiful fractals that you can align very well on. So I'm going to do some analysis on this. So I did some analysis on it. What I did is I did the fractal of the first one, and I'm going to compare it to the second one. Now, I did it using conservative numbers, not the aggressive numbers I have up right here. So this is what I did. I took the distance of the first wave, which is this first wave here. The first wave is from circle to circle. It's bottom of the candlestick to the top of the candlestick of circle to circle. That's 250% in 1999, 2000, and 2001 in that time frame. Then I took the bottom of the oil, the price in 2099, and compared it to the absolute top. That's 1,286% for crude oil futures. Then I took the first fractal and measured it from the bottom of the next candlestick. I cut off the bottom here where it went negative. So basically $10 all the way up to the top is 1,217%. Now, I think this is an extreme that happened here. So what I did is I said that's probably an extreme number. I don't think that's necessarily going to project a correct figure. I took the bottom of this guy here, which is roughly $30. So rather than taking this bottom, I made a more conservative bet, and I went off of the $30 mark roughly, which is the previous bottom here. So I said that this was a double bottom, but given the circumstances, this was accentuated to the downside. So I went from 30 to the first peak here, which is 347%. So what this means is that we have a fractal, which is similar in its wave counts, where we've got circle to circle, circle to circle, 250 compared to 350. So what you do when you do this calculation, it's much like a chemistry calculation, is you have a couple of variables, which is just one variable. This is a known, so if 250% is to 1286%, what is 387% to the next move that could potentially come? That is this equation. It's 249 divided by 1286, which is these two here, equals 347 divided by x. So 347 and x is our potential move of from bottom to top of this one that we're projecting somewhere in the future. If you were to do this math here, you get x equals, and I just put it in an expansion phase, 18.92 times. It's 1,792% is what you get. I said x equals 18.92. 18.92 times $30, which is our starting price from the bottom, equals $568 a barrel of the projected move using a conservative figure. That is if wave one is this move here. Now, I talked about the fractals, right? What are fractals? Let's compare some of these fractals and what does it look like on a company. So what I have here is a company that I'm going to pull up. Here's the company. It's SM Energy. You guys know it from the channel. It is one that I shared on YouTube when I was purchasing it. I think I shared it with the channel in November 1st. November 1st is down here, right down there at like $1 something, whatever it is. $1.63 is what it is. So looking at this chart, I'm going to show you a fractal. I'm going to show you the original move here of this guy here, and I just put this as a 58% pullback there. This guy here is the fractal that's in this here. Remember, it happens on different time frames. So, and what gets a little bit hard here is you could potentially say that this is 1, 2, which is 1, 2, and then we had an accentuated move lower with the 2020 move. That 2018 was going to be the breakout. And this move here is this move here. And I think that is the case. So what I'm gonna do is I'm gonna show you this and what it looks like. So I'm gonna take Barr's pattern. I'm gonna start at the beginning of this fractal. I'm gonna put it all the way to the top. The top is here, and that's our fractal. I'm gonna shrink it way down. I'm gonna drag it over to this side over here, and then I'm gonna zoom in on it. I'm gonna back out and get this fractal roughly the size of where we need it to be. So looking at, remember, these fractals repeat on different time frames. Looking at this, I'm going to overlay this fractal here, and it's not going to be perfect, guys, so just calm down. And I'm going to extend this fractal upward. And this fractal looks something on the lines of that. And I'm going to get these guys out of the way so you can see the fractal itself. If I were to take it and put it on a line chart, that is what it looks like. And let me put this in a different color. I'm going to put the line in white. You can see it much better than what we have today. So the white line is SM and the fractal that is occurring today. This here was the previous fractal of the entire last bull market from the beginning of it. This fractal here is playing out like this. We've got a first move, a second move. This one peaked a little bit earlier than this one. And then we've got the sideways action, and then we've got the pullback. Again, this pullback here is, could it come all the way down here to $10 or $11? It's possible, but we may not pull back more than where we have today. The pullback is highly dependent on market conditions at that time. This one pulled back far more than what we've seen in, I think, under normal market conditions, because this one had a deflationary collapse in it. So if I were to back out, what we're looking at and comparing to is this collapse here, but that happened in 2008. This was an overly big move because of the market conditions at that time. We had a large contraction in loaning, which was deflationary. And if you have deflation, that's going to be a massive pullback in oil. So I think this move is to the large side here. So I think that we are basically positioned in this fractal, much like this is today. And remember, it highly depends on what's going on in the market conditions to create the size of these fractals and the lengths of them. But this is what the fractal looks like. The big move here is coming, and this could look very different. We could also look at this move where it's positioned more like that, where the bottom comes and the move higher looks something on the lines of that, where we hit $130. If this fractal plays out like the way I have it, it basically repeats the top here, almost. It goes to about $100 and something. That is if this fractal remains roughly the same. But as we saw before, the fractal is different. It's larger this time than it was before when looking at crude oil. So it's not going to be perfect, but the fractals sure look like they align quite well. And you can see this bottoming formation. I'm going to do another one just for the heck of it. I'm going to take this fractal, bars pattern. I'm going to go from the top, and I think this here could be a potential bottom, somewhere in this range there. I'm going to take this fractal, put it over here. And guys, I haven't even done this one. I wanted to test it, but I haven't even actually looked at it yet. So you're going to look at it with me. I'm going to take a different time frame. So I have to shrink this fractal up. I'm going to put it in this general vicinity here. Now I'm going to go to a 1 year, and look, this is going to be our fractal here on that pullback. So there's the fractal there. I'm going to try to squeeze it up a little bit. And that's what it looks like there. So when you see me looking at these figures, and you're seeing me look at certain patterns, I'm looking at recognized fractals that I've had before, and then I compare it to that. Now, this fractal could be roughly the same as this fractal, because they will not align perfectly. What we're looking for are the humps, the top where they pause. This pause here is probably this pause here. Remember, it's difficult to say exactly. It's always easiest to look backwards and look at these things. But I think what's going on is that we're probably in this stage here, as this stage here is my guess. And I think this aligns with this. This movement here, one of these guys, is one of, like, basically it's a impulse 1, impulse 2, and then we fight back up. Impulse 1, impulse 2, a third, we fight back up, and then we roll back over. This guy here could be this guy here, and then we come on and roll over. But again, guys, I don't want to say this is necessarily the bottom yet, because we have to make sure, I don't use this to get the exacts. I'm just doing this to play. But this fractal sure looks very close to roughly, you could play it a couple of ways here. Let me scroll down. And this doesn't mean that's the size. I'm just trying to align this up decently. But I mean, you could blow this out. You could see how the fractals kind of come together, but usually you get kind of a sideways action before a move higher. It could happen right here, or we could have further downside. I haven't really played with this fractal as much as the other ones, but it looks to me like we still could potentially have some sideways movement. This here, and maybe the tail on it that is left. A lot of the times when you look at these as well, you can see this fractal. What I'm going to do is I'm going to take the other fractal and play with it some more. This guy that I'm going to take here now is the bottom of this to the full move. That is the fractal that I think that we have, so I'm going to compare this now. Now I'm just playing with fractals, guys. I'm not necessarily calling for these things to happen like this. Oops, let me get this over here. What I'm doing is I'm just shrinking it up. And I'm going to put it roughly in this general vicinity. I probably didn't shrink it up enough. All right, so there's our fractal. I'm gonna grab this guy and move it over here. And what I think this is this fractal here, because I always talk about this pattern, is this guy here. It started there. I'm gonna do this. So if the fractal were to repeat itself, we could see a pretty large move back down to almost $13 or $15 potentially, if that fractal were to repeat. But I don't think it will necessarily repeat the same way and come back the same distance based off of the 2008 crash, because this is a 2008 crash in here. But one thing we can also look at is if we zoom in, I'm going to kind of zoom out like this. The way this thing fell here, the way that this thing fell coming down should be similar to the way that this falls coming down as well. So this fractal looks awfully similar, the way this thing fell, already to where we are today. So I wouldn't get ultra worried. I mean, I know there's a lot of people who worry quite a bit about this, but there's your fractal, and the way that it fell, the number of moves lower, looks very similar to how we moved right now. And we may have a little bit left to go down lower. Maybe we hit in the 20s or something like that. And again, I'm speculating. It's not supposed to be used as financial advice or anything like that. But that's where I think we are based off of the fractals. Those fractals all look very similar. So I think that's where we're at. And the reason I think that's where we're at is because the fractals align quite well. The patterns look the same, the fractals. I don't think that we're going to have that accentuated blowout bottom like 2008 crash. We're not in 2008 crash land, in my opinion, not yet. The housing market isn't in that dire of a situation. So those markets are completely different when comparing 2008, 06, 07, 08 compared to what we have today, where I think we're at the beginning of like a 2000, 2001 move in housing. Housing could be brought back down a little bit based off of the scariness or fear in the markets of markets pulling back in the S&P 500 and the overall stock market. The fractal here aligns very well with that type of movement before, so I still think that we have bull market ahead of us, and it could be very large. Remember, the fractal repeats, but it can be distorted upward or lower based off the market conditions. So this next wave, which I think is here, which is coming, this wave here, can be distorted higher if things happen during that wave that are bullish. A war in Russia and they pull back oil supplies. Whatever it is, it can extend things differently. So the fractals there, I think that is correct. I think where we are human psychological wise is that first kind of bear trap that came in 2001, 2. I think that's where we're at, and we're going to get a pullback here. We'll bottom out, which would be a great opportunity to be looking to purchase some things, and then the big wave comes. So if you guys agree or disagree, put it in the comment section. Love to hear your guys' opinion on this. I'm just playing with numbers or fractals here. I do have on the website, I do a similar fractal analysis to what I did here. So looking at this and looking at the fractal analysis of crude oil here. And this analysis here on the upper left, I think I'm still in the picture there, even though I do that. The fractal here in the upper left, this calculation where you go, this is to this. What I did is I looked at all of the oil and natural gas companies. I looked at uranium companies. I look at all these different companies, and I put what I think are some of the best opportunities in the markets based off this first fractal. Because the fractal here will more or less tell us what could potentially come on the backside here. Things could be distorted a little bit different in this bull market, but we're still constrained to the realities and the affordability in the markets. But again, this is priced in dollars. We could have problems in the dollar. There could be other things that happen during this bull market. So things could be accentuated. What I'm doing is I'm literally saying that these potential companies have large fractals. That's all I'm saying. It doesn't necessarily mean that they're going to go berserk in this next move, but I think they have a high likelihood, a high probability of doing incredible things. Some of these fractals is the way that I identified some of the companies that I invested in the beginning of this bull market. What I did is I took the fractal of the first move, and I'll show you on SM Energy just which fractal I used for a comparison. What I did is I actually took the fractal. I'm going to get into a yearly chart here, so it's a little bit easier to see. This is the fractal I used, was this move here. I used basically the bottom to the top of this fractal here. I can't see the exact height, but this is the fractal I used, and I compared all the fractals across the natural gas and oil companies that I knew of, and I compared this fractal, and I said, these are the ones that have the highest probability of being successful based off of similar chart patterns. There's some companies that didn't have this type of chart pattern, but a lot of the American ones did. And some of the other ones did not. So on some of them, I was comparing apples to apples. On other ones, I had apples and oranges, and I didn't make that same type of comparison. I had to use other I'll say other proprietary methods to figure out what I should do to capture. So what I did is I looked at that. I compared the fractals. I looked at the balance sheets. They looked really bad at the bottom. Don't get me wrong. Some of them looked like they were about to go bankrupt. I spread my money across them, and I swung for the fence with a lot of my money. Some of it paid off quite well. Other ones, we can see the fractals today. So what I did is I took the bottom to the top of those fractals, looked at the pullback, and I basically am sharing all that information on the website that I'll post here shortly. On the Finding Value website under the Platinum membership. Maybe that'll get you an advantage. I own all of these large fractals myself, almost all of the companies. Why? Because the fractal will tell you, it's basically a prelude to what's potentially could come. And I don't think necessarily that a small fractal in a company is necessarily bad. There could be circumstances where something could go crazy, like a high-cost producer with a lot of debt, where the cost hasn't gone up high enough for it to go, we'll call it ballistic. So there's some of those companies out there that I think are still good bets. But it does, I think, put the odds in your favor, showing that there's a lot of leverage in the company when the price moves. So I think there is some validity to looking at it. Actually, there's quite a bit of validity to it, and it could be a good predictive future for potential companies. And what I do is I capture all of them. I sprinkle across all of them to capture these moves. The differences in outcomes could be dramatic. That's why I do it. It could be a difference between a 20-bagger and a 100-bagger. That is worth capturing that move. I don't need to guess and capture the one company. What I want is a little bit of money in the big guys, the ones that move massively. So I want to capture those gains, and I want to have a little bit in those ones that are showing fractals of large magnitude. If you want to know what those fractals of large magnitude are, I'm going to post them on the website here shortly, and you can view them with the Platinum membership. That is who's going to be able to see them. So that is one of the values of having the membership, if you guys want to see it. It will also show you kind of the companies that I'm looking at and what I'm basically lining up to pick up during this pullback in natural gas, oil, and other commodities. All right, guys, that's what I have for today. Give me a thumbs up if you like this content. Subscribe to the channel and subscribe to the website in the description link below. Platinum membership if you want to see that stuff. Thanks for viewing. We'll catch you next time. This is Finding Value.